Hi everyone, welcome back to Corporate Decoder, the place where we dissect corporate filings so you don't have to. Today we're diving into Casella Waste Systems' latest proxy statement. It's a document that might seem as exciting as a landfill, but trust me, there are some hidden treasures or at least some interesting trash to uncover. We'll be looking at everything from direct directions to executive pay and even a peek into their sustainability goals. Let's get started. First off, what is this document even? This is a definitive proxy statement. That means Casella is asking its shareholders to vote on some important issues at their annual meeting, which is being held online on June 5, 2000. The first item on the agenda is electing 3 Class I directors, each for a 3-year term expiring in 2028. These are the people who will be helping to steer the company's direction for the next few years. Next, there's that say on pay vote, which is an advisory vote on how much the top executives are getting paid. It's non-binding, meaning the company doesn't have to listen to the shareholders, but it does give them a chance to voice their opinion on whether they think the executives are worth the money they're making. Then shareholders will vote to ratify the appointment of RSM USL, independent auditor, for fiscal year 2025. Basically, they want shareholders to give a thumbs up to the company's choice of accountants. The proxy statement also includes a summary highlighting company performance and strategy. They're trying to increase landfill returns, drive profitability in collection operations, and create value through resource solutions. Seems like they're trying to do recycling and handle organics, not just trash. They want to allocate capital for growth and strengthen their foundational pillars. Here's how they are doing according to the report. Their total landfill capacity is 1,190 million cubic yards. That's how much space is left in the landfills. Landfill revenue yield increased 3.4% to 6.94 cents per ton. So they are squeezing more revenue out of every ton of trash they bury. The report mentions collection profitability. Collection revenue increased 12.6% to $655, and collection revenue per route truck increased 4.2%. Next, we see they want to create value with resource solutions. Recycling revenue increased 12.4% to $96.4 million, and organics revenue increased 9.4% to $45.5 million. Here's a snapshot of their overall financial performance. In fiscal year 2024, revenues were up 23.1%, reaching about $1.56 billion. However, net income actually decreased by 46.7%, falling to $13.5 million. On the other hand, adjusted EBITDA, a measure of operating profitability, rose by 22.4% to $360.6 million. The stock did well, up almost 130% from the end of 2019 through the end of 2024. They compare this to their peer group, but also the Russell 2000 index. Let's look at the nominees. Michael Burke, Douglas Casella, and Gary Sova are up for re-election. They have experience in finance, construction, and solid waste management. The board makes a point of determining who is independent. This is to make sure that not everyone is an insider or otherwise conflicted. There's a section on related person transactions. This includes deals with companies owned by the Casella family. For example, Casella Construction Inc., owned by family, was paid about $7.8 million for transportation and construction. Scroll at audit views. First scrolly. Now, let's talk auditors. For 2025, the audit committee wants to keep using RSM USLLP. The company paid them $2,083,087 audit fees for 2024 and $1,891.276 for 2023. Casella is also talking about sustainability and social responsibility. They say it's at the core of what they do. They've even linked borrowing costs to achieving certain sustainability goals. This sounds like they're trying to get better financing costs with ESG improvements. They've set some goals for 2030. These include improving safety, growing their resource solutions business, and improving fuel efficiency. They have also been trying to reduce their carbon footprint and increase volunteering in communities. Now the juicy stuff, executive compensation. The goal is to attract, retain, and incentivize executives. This involves a mix of base salary, annual cash incentives, and long-term equity incentives. 75% of annual equity awards are performance-based. Here are some numbers. John Casella's base salary was $763,732. Edmund Coletta made $515,134,244. Bradford Helgeson $455,008. Seawood $55,200. And Sean Steves $35,850. And Seventiz $35,850. Edmund Comp Steves $5,850. Edmund Coffey $4. Edmund $50,000. Yeah, not bad. The named executive officers also have the opportunity to earn annual incentive compensation under a non-equity incentive plan. This is the bonus. Whiting is 45% on adjusted operating income, 45% adjusted free cash flow, 5% improvement in total recordable incident rate, 5% improvement in turnover rate. Based on the goals, they all made about 114% of their bonus. In case things go south, there's a compensation clawback policy. If the company has to restate its earnings due to material non-compliance, they can claw back incentive-based compensation from executives. Finally, the company bears the cost of soliciting the proxy, so they are paying all these costs. The CEO's pay was about 60 times that of the median employee, something to note if you want to work there. There is also a pay versus performance table that compares the CEO's compensation with company performance. So, what's the story here? Casella is growing, but the bottom line isn't growing with the top line, with net income falling. They are expanding into more services and trying to get better deals. It's pretty interesting. The stock's done well and the executives are getting paid handsomely. There are always risks. The proxy mentions weather, increasing costs, and environmental regulations around PFAS. What is PFAS, you may ask? These are forever chemicals and they will lead to increased compliance and remediation costs and litigation risks. Overall, Casella Waste Systems seems to be navigating a complex market well. They're expanding, trying to be more sustainable, and paying their executives handsomely. A potential investor would want to look closely at that declining net income and see if they can get that going in the right direction. That's it for this edition of Corporate Decoder. If you found this breakdown helpful, give us a like, leave a comment, and subscribe for more deep dives into the world of corporate filings. Until next time,